Hello, everybody. This is Alan Elman, the Blue Collar Investor, welcoming you to another of our sample trade videos. This one is a real life example with Lam Research Corp, which is listed on the Nasdaq exchange under the ticker symbol LRCX. Now, this is a trade that I initiated on Monday, August 18th, 2025. It expires on August 22nd, 2025. I'm creating this video after hours on Thursday, August 21st, 2025. Now, it's a combination of both traditional and defensive 5-day covered call trades taken directly from our premium member stock report. Let me first show you a screenshot of that stock report. I highlighted for you in the yellow row, Lam Research, which you could see came from our BCI database. It says other outside the IBD screens that we use. And it's located in the chips industry segment, which is currently rated B. The industry segment was rated B as well last week. And it has passed our fundamental screen, slightly mixed, but bullish nonetheless. The mean analyst rating or consensus of analysts is 1.59, which is outstanding since it runs from 1 to 5, 1 being the best. And the on-balance volume OBV is an up arrow, meaning, again, bullish, more cash flowing in on up days than on down days. And if you move over here to the at the money or near the money implied volatility, 33%, which is robust, not ridiculously high, and certainly enough to generate some nice income, which you'll see in a moment. The liquidity of the options is meets our criteria, so that's a positive. And the earnings report or the ex-dividend dates don't play a role in this particular trade. Next, let's have a look at a price chart, comparative one, with the S&P 500. And this is a 3-month price chart. You could see that Lam Research in the orange line over here has well outperformed the S&P 500 in the last 3 months, which is represented by this blue line on the bottom. So far, so good. Now, if we look at a more extensive technical chart, number one are the exponential moving averages. You could see the shorter term 20-day EMA is above the longer term 100-day EMA, and the price bars or candlesticks, if you prefer that, are at or above the 20-day EMA, a bullish signal. The black oval here represents a bullish moving average crossover. Now, number two is the MACD histogram, which is both a trend and momentum identifying indicator. And you can see all the way to the right over here, the MACD histogram bars have moved above zero, another bullish signal. Now, where this blue arrow is towards the bottom of the screenshot, this represents our stochastic oscillator, another momentum indicator, and you can see it's certainly uptrending. And the volume number 4, where you see this purple arrow, has still been robust, and that's confirming rather all the other technical parameters. So we have a nice bullish price chart. Now, the option chain on Monday, the 18th of August, when Lam Research was trading at 99.04, the 101 out of the money 822 expiration strike had a bid price of 76 cents. The 95 in the money, lower than current market value, 5-day expiration, had a bid price of $4.40. Now, keep in mind, since it's in the money, it's not all profit. And the spreadsheet, the trade management calculator, will break that down, intrinsic value and time value, and let us know what the actual time value initial profit is going to be. So out of the money calls offer 2 income streams, one from the premium and one from potential share appreciation from current market value up to, but not beyond, the out of the money strike. In the money calls, on the other hand, still offer significant returns, but give us additional protection to the downside in the form of intrinsic value of that in the money strike. So let's take this information and feed it into our BCI Trade Management Calculator, or TMC. On the top, you see we have the trade entries with the different strikes and the different premiums, 76 and 440. We did one contract of the more traditional out of the money strike, 2 contracts of the more defensive in the money strikes. I've been defensive predominantly for the last 5 or 6 months in 2025 because of my concerns on the economy. So more in the money than out of the money with covered calls. All right, now the spreadsheet will then tell us that if taken through contract expiration, it is in fact a 5-day trade. If we take a look at the break-even price points, you see the out of the money 101 strike has a break-even price point down to 98.28, and the in the money has a break-even price point much lower, 94.64. It's the advantage of the in the money strike. Your break-even price point is much lower. Now let's look at the returns. You could see in the brown cells for the out of the money strike, we have a 5-day return of 0.77%, which annualizes, wow, to 56%. And there's an opportunity for even additional 1.98% if Lam Research goes from 99.04 up to the 101 strike. Now in the pink cells, we see the calculations for the in the money 95 strike, which had a time value component. You see that 36 cents is the time value of the 440, and that computes to a 5-day return of 0.38%, which annualizes out to 27.66%. In the blue cell, all the way to the bottom right over here, you see that we have a break-even price downside protection to break even of 4.08%. So it would have to drop in 5 days by more than 4.08% when you start to lose money. And that's been the world I've been living in for most of 2025, still generating income, but being on the defensive end of the spectrum. So once again, our initial, just to summarize that, our initial returns was 0.77%, 56% annualized with upside of 1.98% for the out of the money strike, and for the in the money strike, 0.38%, 27% annualized with protection to break even of 4.08%. Pretty nice, solid trades. 2 of them defensive, 1 of them more traditional, more aggressive. The premium that I generated into my cash account was $148 for these 3 trades. The spreadsheet will also tell us our total portfolio initial returns for the 3 contracts and the 148, and that represented a return of 0.7%. There was also an opportunity on the upside of $196, which if we did get that, that would represent a 5-day return of 1.64%. On the flat return, it annualizes to 51%. On the best case scenario, it annualizes out to over 119%. Now, here we are Thursday. The market closed about an hour and a half ago. Lam Research went down in value to 98.41. Actually, the whole market has been going down this week. Inflation concerns and other things of that nature. So, and the Fed also is discussing an interest rate cut for September, and it's looking not quite as likely as it did last week. So, market's been a little under the weather, let's say. So anyway, Lam Research has dropped to 98.41, which is actually only 63 cents below the entry price of 99.04. So if we factor in the premium we generated, we're still actually up 13 cents a share on that out of the money, more aggressive trade. On the defensive side, we're still $3.41 above that in the money strike. So the time value profit is still well protected with only 1 trading day remaining until contract expiration. So to summarize, we can generate very significant returns. Even though they don't look big, it's only for 5 days, and we have a lot of protection. I mean, capital preservation is so important to so many of us, and that's the world that I live in. I want to make money, but I also want to preserve my hard-earned capital. I'm sure you do as well. So we can generate significant returns and also factor in that capital preservation. And we can craft our trades to what's going on in the market today. Are we defensive? Are we more aggressive? Is it a combination? If it's a combination, what kind of combination? For me, it's 2-to-1 on the defensive side. So we did generate a significant initial 5-day return. So far, so good, even though the price of Lam Research is down a bit. And always mention, folks, that these are low risk trades, not no risk trades. You're never going to hit a grand slam home run, but folks, let's hit singles and doubles all day long. So, ladies and gentlemen, that ends another sample trade video. This one with Lam Research Corp, LRCX. I hope you enjoyed this presentation. I hope you find it beneficial. And thank you so much for watching. As always, this is Alan Elman, the Blue Collar Investor. Take care, everybody.